Welcome back, everybody, to the third part in the Beginner to Winner series. Today we're going to talk about 5 ways market structure and multi-time frame analysis will change your trading forever. Give you some understanding on how to take better trades consistently and how to be more profitable as well. Number 1, to show you where price is most likely to reverse from, specific to the time frame that you're on. Number 2, prevent you entering low probability or average trades. We want to be making sure we're entering high probability trades always, so how we can avoid those low or average probability trades. 3, we're going to touch on breaker structure and why it's so important to your trading, how it's going to allow you to get tighter entries and a better return on your trades. Number 4, freedom from the charts. So not spending hours and hours and hours upon end on the charts, and how we can filter out where we should and shouldn't be trading from, and how we can basically be away from the charts when price isn't where we want it to be. And then number 5 is my secret recipe to ensure that you get the best trades with the best returns, have the biggest trade potential, and have a much higher probability of winning, which is my key to making sure that I'm always staying profitable. Now, before we start, if you haven't done so already, please do subscribe to the YouTube channel. As you can see, we're up to 64 subscribers now, which has been massive. We gained about 40 subscribers just in the last couple of weeks. It's growing really, really nicely. Do me a huge favor if you can hit that subscribe button. I really appreciate the support, and it allows me to keep creating this content completely for free for you. Also, if you haven't done so already, head over to the Instagram, which is @StrongMoneyForex. I've got lots of bite-sized educational content over there that will give you secrets and hacks, tips and tricks as to how I stay so profitable in my trading. Also, you'll find a link to the free Discord. I allow about 50 members into the mentorship group. It's completely for free. I'll be releasing my course content as I put it together. And only thing I ever ask is that you follow me and subscribe, like my videos and posts, and that will help me continue offering the best trading content I can for absolutely free. Now on Bitcoin here, as you can see, we'll just draw down this little bit of this downtrend. We were in a downtrend, okay, until here, where the downtrend then is ultimately stopped, okay. From there, we've changed to a higher time frame uptrend, okay, and this is on the 4-hour chart, guys, okay. So this is on the 4-hour chart. Let's mark out these parts here, okay. Put that in blue. Now, as we know from previous videos, when these structural highs break, okay, this indicates to us that the market trend is changing. So these breaker structures to the buy side indicates to us that we are now in an uptrend instead of a downtrend. Okay, and we can very clearly see that is the trend conditions of the marketplace. We're in an uptrend now. Now, the importance of this is that you need to understand that when price is in a downtrend, the sellers are the strong money. Okay, the sellers are the ones who are outweighing the buyers as it currently stands. Okay, and that means that they're then breaking structures to the downside. When that market structure shifts and changes to a buy bias, it takes a hell of a lot of money. Okay, the big institutions, this collective of people here has put more money into the buys than the sells, which has then at this point here outweighed the sellers and broken this structural high. The significance of this is the amount of money that it's taken to break this high has outweighed the sellers, which means the buyers now are in control. So when we see these changes happen, especially on higher time frames like the 4-hour, for example, when we see these changes happen, we can bank on the fact that the probability is that this trend is going to continue upwards, okay? And what this then means for us, I'm going back to point 1, which is to show you where price is most likely to reverse from. Well, we now know that we're a buy bias. So what we're looking for basically is buys. Now, what I will always use to decide where to trade from, is this range finder here, okay? Now this range finder okay, clearly tells us where premium and discount is. Now, if we were selling the marketplace, and you can see this one here, let me just expand this for you guys, okay? So on this downtrend here, okay, when we have a breaker structure, which is what we've had, okay, so this is a breaker structure to the downside because we're still in a downtrend. What we do is we draw the range finder on from the last high to the new low, okay? This then tells us where premium is. Now, why premium and discount are relevant is for point one, to show you where price is most likely to reverse from, okay? Premium is where the big players are most likely to sell from, and discount is where the big buyers are most likely to buy from. Okay, so what we can do then is once we know what trend that we're in, we can then use premium and discount to tell us where price is most likely to come to A, to come back to, and B, most likely to reverse from. Okay, so tip number one was to show you where price is most likely to reverse from. Well, this is how we do it. We use a range finder, and that tells us where we're most likely to reverse from. And you can take some pretty simple trades here. So what I would do is we draw on called supply and demand zones, which is probably a little bit more detailed that we need for the moment. But for the time being, okay, we'll draw on our premium and our discount areas. So that's our premium area, okay? That's our discount area, okay? And this is then where, when price comes back into these areas, we can be looking from sells if we're in a downtrend or buys if we're in an uptrend, okay? And it's a pretty simple concept. Price on a downtrend is best value here. So what do I mean by best value? Okay, best value is where the big players want to be selling from in a downtrend and the big players want to be buying from in an uptrend. The reason why they want to do this is that they get best value for money, okay? Premium and discount is exactly that. So if you're selling something, let's say you're going onto eBay and you were, I don't know, selling a laptop, okay? You want to sell that at a premium price. You as the seller, you want to get a high price for it. So if your laptop's worth 500 quid and it sells for £600, you've got a premium price. This is exactly what's happening in these premium discount areas, okay? You wait for price to come back into this area, which in this range is the premium area, okay? You can hold it down to say the discount area and you'd have taken half a decent trade, okay? Pretty happy with that all day long, okay? So when you're selling, you want to sell at a premium. You want to get the best value. And equally, if you were buying something, let's say you were buying that laptop, you don't want to buy it at 600 quid, which is up here. You don't want to buy it at £600 or $600. You want to buy it at discount. You want to buy it at $200, okay? So again, if you're buying the market, you want to be buying from discount, okay? You want to be buying from the discount areas like that. And again, you can hold up to premium, whatever it is, okay? So this is what premium and discount is. This is how we use it in our trading, okay? The best value trades in a downtrend are in the premium area, which is the top 25% of a range. And the best value trades in an uptrend are in the discount area, which is the bottom 25% of trade. And that is where the bigger players are going to be pushing the price to in order to get their best value trades, okay? And that's how they make their money, okay? Let's just clear this up a little bit. Okay, we've got here our trading ranges, okay, and this is a trend on a 4-hour time frame. So how can we use multi-time frame analysis to allow us into better trades and get better results? Okay, so if we drop down to, let's just say, the 1-hour time frame, let's have a look at, let's even go as low as say the 15-minute. Okay, so the trends that we're looking at are always relevant to the time frames that you're on, okay? What I mean by that is the trend that we've drawn out so far is the 4-hour trend, okay? And we can use multi-time frame analysis to get us into even better trades and sometimes even get us into kind of counter trend moves as well, okay? These moves here, for example, okay, these are counter trend moves, but you could technically trade these. Let's say we are moving up into our premium area, okay? We then have this breaker structure here, okay, a retracement here, and then some kind of choppy price movement. But ultimately, we then break structure, break structure, break structure, break structure, okay? So what we can do here, let's just mark that on there. Okay, we've had our breaker structure here. Okay, because we've broken those lows. That's our new breaker structure on the lower time frame. Okay, and we do exactly the same thing. We then mark out our range high to our range low. Let's move this across so we can see it easier. So that's our range high to our range low. Okay, we can then draw in our premium area. Okay, and this is how we use multi-time frame analysis to get us into better trades, counter trend moves and things like that, because the structure that you're on, that is relevant to the time frame that you're on. So previously we've been in an uptrend, and if you were trading just the 4-hour time frame, you would only be trading uptrend. Now on the 30-minute, we can see we've changed to a downtrend, and you could be taking trades from these higher zones and holding them down to say the discount area, and now you've got a much better trade. The previous trade was the 2R, this is now a 6R. So this is how we use the multi-time frame analysis to get us into tighter entries and get better results. Here we've had a change of structure, so we've had this is now a break of structure here, so we'll mark that on. Okay, and then let's just mark these highs and lows. Okay, so this is now a new uptrend, okay, because we've had this break of structure. Okay, and another way that we use the higher time frame is we look at these zones. Okay, we know from our higher time frame that this is a discount area, and what we're looking for here then is we're expecting price to reverse. Okay, so we're expecting price to reverse. Now what this does is leads us on to point 2, which is preventing you from entering low probability or average trades. We don't want to be buying from anywhere until we get into the discount area. Okay, and this, like I said, will then prevent you from entering average trades. We use these breaks of structure, okay, which gets us into then tighter entries, and we use these on multiple time frames. So we know we're in an uptrend on a higher time frame, but currently we're in a downtrend, so we don't want to be buying this now. On the lower time frame, the strong money is towards the sellers. That's why they're breaking structure to the sell side. But when we get into this discount area, we can then start looking for buys. We've confirmed that from discount, we've got a change of structure into a buy bias. Now we can be looking at buys. Point 2, preventing you from entering low probability trades. Now we've rejected this area, we've created an uptrend. This is where we can be looking for buys. And again, we can use the rangefinder. So I think the first one that we get actually is here. Yeah, so we can draw this all the way out. Price comes back into our discount area, look there. Okay, so we've got a buy bias. We've left a discount zone. Okay, so we know we're moving upwards now. This is now a high probability trade as soon as price comes into that area. Now, you may be thinking, we've left a lot of money there. Yeah, we have left a lot of money there, but there's other ways that we'll look at that will get you into trades earlier. Okay, there's a couple of setups I can see there that we would have got in here. So there's other ways that we'll get into these trades. But what we're doing is we're just increasing our chances of these trades winning. We're putting the market moves in our favor. We're using our breaks of structure to get you into tighter entries. Okay, so we've ended up splitting the videos into 2. I just wanted to pop in and say thank you for tuning in. Again, it has ended up being slightly longer than I expected. I want to make sure that I'm giving you everything that you need. High quality content is what I'm always wanting to put out. I'm not here to give you average information or to miss out key parts of information that you struggle with. I spent loads of time on YouTube finding out 90% of the information. It was that last 10% that I really needed to make money that I ultimately had to pay for. My focus and my goal here always is to provide you with high quality content that will teach you actually how to trade and not miss out any key parts of information that will, lead you astray and lead you into losing your hard-earned cash. So thank you again for tuning in. Second half of the video, I'm probably going to drop at very, very similar time. Probably going to release these both at the same time, so you've got all the information. You can form a trading plan just off the information in these first few videos. The next part of the course will take you through some further understandings of everything we've discussed, some finer details into why the market moves like this and how we can use the key factors that it gives us, the price action that it shows us, to enter into better trades and increase your your profitability and increase your chances of winning. So if you'd like to hear more about that, please do make sure you pop that notification bell. If you haven't done so already, subscribe to the channel, like the video because it helps me massively grow the channel. And below, if you put any comments that you have telling me what you're struggling with in your own trading, I'll put together videos for you that will answer those questions. This video here, this is why your supply and demand zones keep failing. This is a video that was one of the people in the mentorship asked me about, and I put together a video for them to kind of explain it in more detail. So, you know, I'm looking to grow my content as much as I can. Please do come back to me and let me know what you're struggling with. And if you haven't done so already, hop over to the Instagram at Strong Money Forex. You can also head to the Discord. We have a few spaces left in that Discord. It's completely free mentorship for the first 50 people that join. So hopefully see you there.